Okay. Yeah, Assalamualaikum and good afternoon to Dr. Khadijah and my fellow friends. So we are from Good Night. We'll be presenting on topic permanent establishment. So you can refer on the textbook 555. So my name is Nur Najwa Amira and my group members are Siti Khairunisa and Nur Shazmi. Next. So first of all, we look first on the definition of permanent establishment. Next. So before we go in details, so I have a simple example, for example, for permanent establishment. So for example, if a Vietnam company has a business in Malaysia, so how to know whether the Vietnam company has a permanent establishment or not? So we need to look in the we need to look on the definition of permanent establishment whether the Vietnam company fulfill all the criteria or not in the definition itself. So if the fulfill all the criteria, it can be taxed in the business income. So there are three elements in the permanent establishment that need to fulfill first by the company in order to have in order to regard it as a permanent establishment. The first one is a place of business. So exists a facility such as premise, facilities or installation, and in some instances, machinery or equipment. It may mean a space which is at its constant disposal, means that if a foreign company has a business that conduct a can conduct a business, a place of business, so it fulfill the first criteria. The next criteria is fixed. The place of business must be fixed, so there need not be any formal legal right to use a particular place or space. It means that the business itself do not need seek for any approval or any approval from the authorities bodies in order to conduct their business. And the last one is business is carried on wholly or partly. A person who are dependent on enterprise or person who represent the enterprise conduct the business of the enterprise through this fixed place of business. So from the business itself, it can generate income. So if the foreign company fulfill all these criteria, it can be regarded as a permanent establishment in Malaysia. So next. So these are the example of the fixed place of the business. So such as a place of management, a branch, an office, a factory, a workshop, a mine, oil or gas well, quarry, or any other place of extraction or natural resources, including timber or forest produce, and a building, site of construction, installation, or assembly project which exists for more than 6 months. This will be presented by my group members in details. And the last one is a farm of plantation. So next. So we look on the permanent establishment and the business income. In business income, article of most DTA. DTA refer to the double tax agreement. Permanent establishment is a factor to consider to determine which country will have the authority to impose tax on particular business activity. So there are two situations that need to be considered. The first, if it is attributed to permanent establishment, it will impose on the tax on the business income. So it can known as a trading in. So for example, if the foreign enterprise is carrying business through a permanent establishment in Malaysia, so the business profit will be taxed on the in Malaysia. So if it is not attributed to permanent establishment, it will not impose tax on the business income and it known as a trading rate. So for example, foreign enterprise do not establish permanent establishment in Malaysia, so business profit will not be subject to, will not tax in Malaysia. So do not need to pay the tax in Malaysia. So next. So as a conclusion here, we can conclude that if a permanent establishment exists in Malaysia, it is subject to the Malaysian income tax. So if an enterprise having one or more the fixed place, it can be, for example, enterprise have a place of enterprise have a factory and a branch of office, let's say. So it can be also the need to pay the tax and known as a trade in. So next, I will go pass to the next presenter, Nisa. Thank you.
Okay, you guys can hear me?
Yes.
All right. Okay. So, I will explain further on the construction or installation project. Okay, it is stated in Article 5, Paragraph 4, Malaysia UK 1997 and Malaysia Japan 1999. Okay, it is stated that an enterprise of a contracting state shall be deemed to have a PE in the other contracting states if it carries the supervisory activities for more than 6 months. It means that whenever, if even the contracting state did not have any fixed place of business in Malaysia, but it carries a supervisory activities regarding this project or building site or construction for more than 6 months, it means that they have a PE in Malaysia. Okay, so for example, when UK or Japan can have a contract with Malaysia regarding this building site construction or installation project, okay, they can establish a PE in Malaysia. Okay, if they supervise the activities in Malaysia at their countries for more than 6 months. Okay, so they have this can rise a PE in Malaysia. Okay, but it's not applied to all DTAs. Okay, the double tax agreement. Okay, for example, for agreement Malaysia-Singapore does not stipulate a time frame. Okay, it means that whenever Singapore have a building site construction or installation project in Malaysia, at that time they already have a PE. Okay, there is no minimum period for Singapore to have a PE in Malaysia. Okay, so I have example here. Okay, a German company has secured a project to install 50 wind turbines in Malaysia within a 5 months period. Okay, and it stated that in the DTS agreement, okay, Malaysia Germany stipulates a minimum period of 9 months. Okay, so the question is PE established or not in this question? Can anyone, if you guys understand, if PE established or not in this example?
No.
Okay, Pang. Okay, thank you, Pang. Yes. Okay, it is unlikely to establish a PE through this installation project. Okay, because the agreement state the minimum period of the for German to have a PE in Malaysia is 9 months, but the project is only within a 5 month period. Okay, so it's not meet the minimum period to have a PE in Malaysia. Okay, so okay, we move to another issue. Okay, about agency contractual relationship. Okay, it means that whenever a foreign enterprise okay use an agent in Malaysia, they can rise a PE or not in Malaysia. Okay, so the principle state that foreign enterprise that use independent agent, broker, general commission agent to market their products in Malaysia will not give rise to the establishment of PE. Okay, why? Because the foreign enterprise is merely trading with Malaysia. Merely trading means that there is just a process of selling and buying okay, between the Malaysia and the foreign enterprise. Okay, the foreign enterprise does not have a fixed place of business in Malaysia. They just sell the product to agent in Malaysia, then the agent will market and sell the product to Malaysian, okay, to us. Okay, so because the independent agent is a separate entities from the foreign enterprise. Okay, so the profit get from the trading will not be taxed in Malaysia. And it's not give rise to the foreign enterprise to establish a PE in Malaysia. Okay, so we can refer example 49.4. Okay, as Najwa said just now, our topic is we are referring the advanced taxation book. Okay, so you guys can open the book, okay, and can see the example 49.4. Okay, it's about Disneyland Incorporation, okay, that manufacture Mickey Cat T-shirt in New Zealand. Okay, this company sold 500 t-shirt to Ahkwai, okay, independent agent in Malaysia for 35 per t-shirt. Okay, and then 35 ringgits we times with 500 units of t-shirt. Okay, we will get an income of 17,500. Okay, the Disneyland Incorporation will get an income of 17,500. Okay, and then so the 1700 and 70,500 income will not be taxed in Malaysia because the company does not have a PE in Malaysia because the Disneyland Incorporation use Akwai as an independent agent to sell the product to the Malaysia. Okay, so next. Okay, however, okay, just now we talked about independent agent. Okay, so however, the appointment of a dependent agent may establish a PE. Okay, if any of the following activities is present. Okay, first, he has an habitually exercise an authority to conclude contract in the name of enterprise. He is referring to the agent. Okay, so the agent uh, can conclude a contract in the name of enterprise. The agent able to deal a contract with the customer in Malaysia for the foreign enterprise. Okay, the agent can accept a purchase order or issue invoice to the customer on the behalf of foreign enterprise. Okay, second, he maintain a stock of goods or merchandise belonging to the enterprise from which he regularly fills order or deliver goods and merchandise on behalf of the enterprise. Okay, it means that the agent can receive the order from the customer and then the agent itself will fill the order and delivers the product to the customer. But in behalf of the foreign enterprise. Okay, and last criteria is he manufacture or process goods or merchandise belonging to the enterprise. Okay, it means that the agent manufacture or process the good okay belonging to the enterprise or the foreign enterprise have a warehouse in Malaysia and then agent in Malaysia will handle the warehouse in in behalf of the foreign enterprise. Okay. So overall, when dependent agent did activities on the behalf of the foreign enterprise in Malaysia, it may establish a permanent establishment. Okay, but the activities have to be continued activities or active conduct of business in Malaysia, and it is also not that the PE can establish even though the dependent agent operates without a fixed place of business as long as this criteria okay these three activities okay is present. Okay, so last from me okay is about tax payable. Okay, the tax payable for the foreign company who said to have a PE in Malaysia. Okay, the business income would be taxed at corporate tax of 24% on chargeable income. Okay, while for the Malaysian, okay, for the dependent agent, okay, the derived income is allowed as a credit against the foreign tax imposed on the foreign enterprise. Okay, which we have two credit here. Okay, unilateral credit and also bilateral credit. We already cover this in our taxation too and the double tax agreement topic. Okay, which when unilateral credit is given for income earned for Malaysia that did not have DTA with Malaysia, and the bilateral credit is granted to income earned from countries which have DTA with Malaysia. So next, I will pass to Shazlin.
Okay, next, let's move on to the negative list in PE, which is the activities that do not constitute of PE. It has 5 conditions that not including in calculating the PE. The first one is the use of facilities solely for the purpose of storage, display or delivery of goods or merchandise belonging to the enterprise. Next, maintenance of a stock of goods or merchandise belonging to the enterprise solely for the purpose of storage, display, or delivery. The next point is maintenance of goods or merchandise belonging solely for the purpose of processing by another enterprise. And for point D, maintenance of a fixed place of business solely for the purpose of purchasing goods or merchandise or for the purpose collecting information. And the last one, which is activities which do not constitute a PE, maintenance of a fixed place of business solely for the purpose of advertising, supply of information, scientific research, similar activities which have a preparatory or auxiliary character. Auxiliary character, which means the enterprise only providing supplementary or additional help and support to another enterprise. This means that if all an enterprise does in the other country is purchase, store, deliver or collect information or any combination of these activities, the enterprise is deemed to have carried out activities that are merely preparatory or auxiliary in character. The enterprise will not establish a PE purely by carrying out such activities. Okay, next. So, the conclusion of this topic is, once a PE is established in country B, such as Malaysia, the enterprise from country A, which is Germany, becomes taxable in the country B, but only on so much of them as is attributable to that PE. Before that, I want to give an example for a better understanding in this topic. The situation are like this. A Germany company has contract with Malaysia to supply 500 wind turbines. The installation expected to take 24 months, which is cost to construct and fabricated 500 million.
Sorry. Okay.
Okay, 500 million in Germany, while the installation cost 200 million ringgit in Malaysia. The income pertaining to the installation project, 200 million ringgit, will be attributable to the PE in Malaysia. The activity is wholly carried out in Malaysia. But why we only take installation only, not the construct and fabricated? This is because, based on Najwa's explanation just now, installation is one of the fixed base which is positive list in PE, either partly or wholly. It already meet two criteria, which are the process is more than 6 months, which is 24 months for installation, and wholly assembly in Malaysia. So, the German company will be subject to tax in Malaysia for income derived from installation. When subject to tax in Malaysia, the German company also will be taxed in Germany, but will provide bilateral tax relief to avoid DTA. Bilateral credit, as what had been explained by Siti Harunisa, it is granted to the taxable foreign income from countries which have a double tax agreement with Malaysia. Bilateral credit is determined by comparing the tax suffered by foreign country and Malaysia tax payable against foreign income. So we will choose the lower between that. Okay, that's all from our group. Thank you.
Wah, IQ thank you hari ni ada time Siapa jaga time tadi tu? Very good. But I think that this topic is a revision, isn't it? It was covered in text 2, I think.
But the detail of permanent establishment we not cover in taxation too. We
Oh, I
we
see.
only cover until the unilateral and
Bilateral.
Yes.
Alright. So the first part of the unilateral, bilateral exemptions semua tu you all belajar lah.
Um, Exemption.
I mean kan ada topik dia double tax agreement kan, topik
Aha.
the chapter tu, the first part tu you all belajar tak? Before the permanent establishment.
About the industry, for
Yeah.
industry. Yeah.
Yang ada example heaven and ada 3 country tu. The first, second pages kot of the chapter. Do you have that?
Okay. Example in textbook.
Yeah.
No, because
it was called double tax agreement kan?
yeah, because in taxation too, our lecture not refer to any textbooks.
Oh, I see.
Yeah.
Alright. Okay, tak apa. Because we have another presentation, I don't want to hold that, but remind me to explain further. Alright, because this topic actually normally you are given a scenario, right? For example of the German company, alright, construction, installation, all these things. So what happened is that you have to decide whether the German company has to pay tax in Malaysia or not, right? So how you decide, then you have to go back to PE lah. Whether then you have to look at whether there is a permanent establishment by the German company in Malaysia, right? So if you say that okay, there's a PE in Malaysia, then the German company has to pay tax in Malaysia lah. Yeah, so you have to go back to the PE and then decide, justify why you say there's a PE, and if there is, then tax is paid in Malaysia. Alright, so what happened is that we'll talk about double tax agreement, alright? So for the German company, let's say that there's a PE in Malaysia, so it means that the German company has to pay tax in Malaysia. At the same time, alright, the company may also have to pay tax in their German, right, in their country. So in this case, for that German company, the company has to pay 2 taxes on the same income. Alright, one is to their country, the other one is to Malaysia. Why you have to pay to Malaysia? Because of the issue of permanent establishment, right? So when you have to pay 2 taxes, so that's why you come with the double tax agreement. Alright, so you have to look at the agreement between Malaysia and German. How can we reduce or can we reduce the burden of the German company, right? Rather than, of course, they have to pay 2 taxes now, but can we give them some kind of exemption? Can we give them some kind of credit on the tax liability? Alright, because in this case, they have to pay 2 taxes. So that's why the double tax agreement comes in order to reduce the tax burden. Namanya double tax agreement. So rather than paying tax, double tax on the same income, so we are trying to give a leeway lah. Alright, it means that, but then how are you going to give the exemption or the credit? Then it goes back to the content of the double tax agreement between Malaysia and German. Alright, maybe we decided, okay, Malaysia and German, we decided, okay, we're going to give a credit. Alright, or maybe we give exemption. So that is the first part of the tax book lah. Alright, then only you look, okay, when you have double tax agreement, then you're going to, if there is a credit method, then you're going to use bilateral. Alright, but if it's an exemption method, then you use the method of exemption. Right, but this topic is only looking at the permanent establishment. But in terms of the application, alright, you have to know that why this topic is important, because you want to see whether the income derived by the, in this case, for example, German company, is it taxable in Malaysia or not? Alright, and remember that the income that he received here is the business income. Alright, but if we talk about your royalty, interest, right? So German company is a non-resident company. So, but the income is, if it's a 4A, 4 big A, then it becomes withholding tax. Right, but in this case, it's not withholding tax, it's a normal tax. Right, and at 24%. Why? Because income is a business income. Rather than your royalty ke, interest. Remember last time kita buat withholding tax? So that's a different. Now you're talking about foreign company having tax in Malaysia, having a business presence in Malaysia. So in other way, you can also look at this topic, a Malaysian company having a business in other country. Yeah, so for that, you have to decide whether, okay, in this case, yeah, we have to see whether the Malaysian company has a permanent establishment in the other country. So then you have to look at the double tax agreement. How to decide on the permanent establishment. All right. So remember that we have many agreements. All right. And for every country is one agreement. So we may have Malaysia and Japan, Malaysia and German, Malaysia and Indonesia. So all this is agreement which is separately. All right. So if you are looking, if you invest in Indonesia, you have to look at the double tax agreement between Malaysia and Indonesia. You have to see that how do they actually decided on the permanent establishment. In general, all right, the permanent establishment, the article is almost the same. It's just that normally the different, for example, just now remember you talk about the 6 months period. All right, there are 3 months period, or for example, Singapore, there's no time limit. As long as you have your machine there, all right, your contract is there, then you are the permanent establishment, right? But others, maybe they don't have that. Yeah, so again, it depends on the content of the double tax agreement, right? So even the permanent establishment is different, but generally it's almost the same. It's just that you have to make sure that if you want to invest in other country, so what are the double tax agreement that we have been agreed between Malaysia and the other country. All right, so that's on the application of this topic lah. And normally it's always theoretical lah. All right, I've never seen something that have to compute tax ke, belum lagi lah. Except for the first part tu. Alright, when talking about the difference between whether you are given an exemption ke, you are given tax credit or tax deduction. Right, so maybe later when I do corporate tax planning, for example, maybe I can add on into that. Yeah, that topic. Alright, thank you for the group for the presentation. Alright. Can we have the second group on Labuan?
Yes, Doctor.
Yeah.
A moment, please.
Jenny,
Yeah, a moment.
can you share the slide?
I Can you see the slide?
Yes.
Yes, Jenny.
Okay.
So can I start?
Yes, please.
Alright, Assalamualaikum and good afternoon to Dr. Khadijah and my fellow friend. So we are from Group 8. We are going to present the topic of Labuan. First of all, I would like to introduce myself and my group members. My name is Ifa Rashida and my group members are Jenny, Simsufan and Fayuzin. Next. Alright, what is Labuan? Labuan is an island in the South China Sea off the coast of Sabah in East Malaysia. And then in 1919, Labuan has established as an international offshore financial center, IOFC, to attract international financial activity such as banking, insurance, trust, fund management, investment holding and petroleum, and also shipping operation. Labuan was located at the kilometer of the shoreline of Sabah and 123 kilometers from Kota Kinabalu. Next. So the tax system in Labuan, the legislation governing income tax is Labuan Business Activity Tax Act 1919, which is known as Labata 1919. Labata 1919 function is to govern the opposition assessment, collection, and recovery of tax on Labuan business activity. So, under Section 3 of Labata 1919, a Labuan entity that carry on a business activity in Labuan shall be charged to tax in according with the year assessment of Labuan business activity. Meaning that all the Labuan entity that carry on a business activity in Labuan will be charged to the tax under Labata 1919. Next. Okay. Labuan entity. What is Labuan entity? Labuan entity can be defined as a mean of company, foundation, Islamic partnership, limited liability partnership, Islamic trust, Labuan trust, Malaysia Islamic Bank licenses, Malaysia Bank licenses, financial institution, and also any person declared by the minister to be a Labuan entity under subsection 2B2. Next. Okay, under subsection 2B2, the Labuan entity shall be fulfill the two requirement, which is must have an adequate amount of annual operation expenditure, and also must have an adequate number of full-time employee. If they are failed to fulfill the two requirement, they are not enjoy to preference tax 3% under Labata 1919. So if they fail to fulfill, they will enjoy the tax of 20% tax under income tax 1967. Next. Okay, income tax in Labuan. There are two legislation which is under section 3B of Income Tax Act 1967, which is tax shall not charge under this act on income in respect of any offshore business activity carried on by an offshore company, meaning that all the business activity in Labuan shall not be charged under Income Tax 1967. And then under section 2A1 of Labata 1919 stated that any other provision of this act, Labuan entity carry on a Labuan business activity may make an irrevocable election in the prescribed from any profit of Labuan entity will be charged with the Income Tax Act 1967, meaning that the business entity that carry on a business activity in Labuan that make an irrevocable election will be charged to the Income Tax Act 1967, not to the Labata 1919. Okay, next. Okay, this is for easy understanding. So, Labuan entity that carry on a Labuan business activity and then they fulfill sustainability activity requirement and then they not do election made under section 3A, they will be charged to Labata 1919. But if they are Labuan entity that carry on business activity but not fulfill the activity requirement, and then they will be charged to Income Tax 1967. And next, if they are Labuan entity and carry on business that carry on non-business activity, then we will charge under Tax Act 1967. Okay, next. Alright, Labuan business activity. Labuan business activity can be defined as a Labuan trading or Labuan non-trading that carry on in Labuan. So, this revised definition means that a Labuan entity may trade in any currency, including the Malaysia currency, and trade with the Malaysia residents. Next. Alright. So the tax treatment in Labuan consists of four, which is first in Labuan non-trading activity. They will be not subject to tax. And for Labuan trading activity, there will be 3% of net profit per audited accounts. And if they carry on both Labuan trading and non-trading activity, then they will be charged to 3% of net profits. And if they are non-Labuan business activity or where an irrevocable election is made to be taxed, then they will be charged under Income Tax Act 1967 by 20%. Next.
Hold on, yeah. I just want to highlight here the difference in terms of tax between Labata and income tax. Labata is very low, all right? It's 3% only, but the 3% is on net profit of audited accounts, all right? But if you're going into income tax, it's 24% on chargeable income. So in arriving to chargeable income, remember you start from net profit, do adjustment, and then you have the current capital allowance, deductions, all that. Yeah. So that's the difference. But there must be a reason why, even though you see that the under Labata is only 3%, but why there is an option for company to go for 24% under income tax. So there could be, it depends on the company. Sometimes 3% of net profit is better for them. All right, but the other company, they may go for 24% because they may have a lot of losses, for example, that they can claim. They have a lot of capital allowance. For example, if remember that this company is a trading company, so they may have their capital allowances as well. All right, so all these, it depends on the company. But once company go for example, they go for income tax act, all right, the name is irrevocable, so they cannot take back. If they want to go for income tax 24%, then they cannot go back to Labata. But it means that that could be in the same year, but maybe next year they may want to go for Labata. I'm not sure. Can I go this year under income tax? Next year I want to go for Labata? Can I do that?
No, Doctor.
Cannot.
Cannot.
Different year tak boleh
Cannot.
Okay. Alright,
Okay.
can continue.
Alright, okay, next. Alright, okay, last slide for me. The intellectual property income. Intellectual property consists of industrial design, trademark and service mark, copyright, utility, innovation and discovery, patent, secret processes or formula and know-hows. So, with the effect from 1 January 2019, any income from royalty or other income derived from the intellectual property right by Labuan entity shall be subject to tax under the Income Tax Act 1967, not under Labata 1916. Meaning that the royalty income or other income derived by Labuan entity from any intellectual property will be not enjoy the preference 3% tax rate of tax exemption, but will instead be subject to tax at the rate prevailing under the Ministry Income Tax Act 1967. So that's all from me. Then I pass to the Jenny for the next presentation.
Okay, next, abolishment of flat tax elections, which means discontinue of this flat tax election. Previously, after the inception of Labata 1990, a Labuan entity is allowed to make an election to be taxed at flat rate of 20,000 instead of 3% based on Section 7 of Labata. After the deletion of Section 7, a Labuan entity carrying on Labuan business activity is no longer entitled to elections and will be taxed at all times at 3% of the chargeable income, which means that there is no more election.
Hold on. Are you sure it's 3% of chargeable income or 3% of net profit?
Let me check first.
Tak apa, later you check on that, yeah?
Yeah.
You continue first. Because just now, because tadi Ifa kata 3% of net profit. And here you say 3% of chargeable income. So I'm not sure which one is right.
Okay.
Okay, later you check
Sorry,
on that.
Doctor. Net profit, Doctor.
Net profit. Okay.
Yes.
It should be net profit. Okay then.
Okay. Next, tax rebate. The payment of zakat by a Labuan entity will be given a rebate against tax charge under Labata 1990. For dividend income, a Labuan entity is allowed to.
What's the difference with the Income Tax Act with regard to the tax rebate? With regard to the zakat, payment of zakat by company. Is there a difference between Labata and income tax?
Wait.
Company. Zakat payment. Anyone else can help? Or is the same?
I think it's the same.
What is a rebate? Rebate is given deduction against what?
Against the tax paid,
Against tax?
the tax payable.
Tax liability, yeah. But under normal company, under Income Tax Act, if the company pays any zakat, that zakat is given as a deduction against your chargeable income. Right, so your chargeable income minus your current year loss, minus your approved donation, then you can minus zakat. But that zakat is restricted to 2.5% of your aggregate income. But in the case of labata, if the company pays zakat, zakat is given as a deduction against tax liability. So the impact is higher. So it means that the company will pay after 3% of net profit, then minus zakat. Right, so because they don't have that computation of the chargeable income, all that, so whatever zakat paid by the company under Labuan entity, so the zakat payment is given against their, as a deduction against their tax liability. So their tax liability will be lower lah, of the 3% from the net profit. Okay, thank you.
Okay.
Okay.
Next, dividend income. A Labuan entity is allowed to hold share in a domestic income. Dividend income received from domestic income or from Labuan entity and overseas company will be free from tax as usual as how we do on business income. Next, withholding tax is exemption. Withholding tax is a tax on non-resident. When a Labuan entity makes payment to non-resident person or another Labuan entity, no withholding tax is payable. In tax 2 that we have studied before, non-resident is liable to withholding tax. But for this case, non-resident is not liable to withholding tax. And for interest and loyalty, it is exempted from tax. Next, employee incentive. In order to attract talented foreign individuals to lead entities, tax exemption is provided on employment income, such as first, non-resident director who exercise.
Hold on. Non-resident or non-citizen?
Or non-citizen.
It's two different things.
Yeah. Non-citizen director who exercise director of a Labuan entity will be tax exempt on director fee. And for non-citizen with managerial capacity, 50% of gross employment income will be exempted. So next, for Malaysian citizen, 50% gross housing allowance and Labuan territory allowance received by the Malaysian citizen will be tax exempt in Labuan. And professional firms which provide services to domestic company in Labuan remain subject to income tax on its business income. 65% of statutory income on the provision of legal, accounting, financial, or secretarial services rendered in Labuan will be tax exempt.
Wow.
So next, I will pass to next presenter, Pan.
Okay, I will be presenting about country by country reporting. Actually, this country by country reporting is related to transfer pricing, which has been presented by previous group to avoid company for practicing harmful tax practice. And this CBCR is applicable to MNE who have consolidated group revenue equal or more than 3 billion ringgit, and also they must fulfill the parent or subsidiary is a Labuan entity. And then for the next slide, CBCR is actually introduced by OECD, which stands for Organization for Economic Cooperation and Development. And CBCR requires transfer pricing and financial information documentation, which avoid base erosion and profit shifting, BEPS, which is the term for describing how company avoid tax and shift their profit. And then for Malaysia, the rules are, even if you are the parent or subsidiary, you must identify reporting entity for the group and notify the DG. And then the notification must be made before the last day of financial year. And then the CBCR is the actual documentation and reporting. It must be filed less than 12 months after the last day of the reporting year. For the next slide. And then for the Labuan entity DTA relief, for Labuan entity, they are carrying business activities. Management or control of its business must be exercised in Malaysia. And for investment activities, management or control of its affair by controlling authorities such as directors or executives must be in Malaysia. For the next slide. And then for Labuan entity, that carries on trading activity, they must file the tax return LE1 and LE4. For non-trading, which is LE5. And then after they have
Hold on.
submitted, yeah.
Just this non-trading activity, before this, it was not tax, right? Oh, salah. Was it tax, the non-trading activity? Yeah, investment, all that. I thought that IFA tadi kan? Can you please check? I think non-trading is non-taxable. Or given exemption, something like that. But maybe...
Not subject to the tax, doctor.
Not subject kan, I think. Except
Yeah.
royalty.
Yeah.
So non-trading activity here, even though company has this non-trading activity, they still have to submit written form, LE5, but it's just that for the purpose of submission documentation only lah, I think, because they are not taxed actually for Labuan.
Yeah. And then after RIB has made an assessment, they will issue a notice. And then after the issuance of notice, tax must be payable within 30 days. And then if the company failed to do so, 10% will be charged for any outstanding taxes had not been paid.
Do you notice something about this? Why did they need to wait for RIB to issue a notice of assessment? What's the difference with the normal company?
Because IRB need to audit the Labuan entity.
We also need to audit. I think that here, looking at this information, all right, it means that whenever the company submit their written form, which is not stated, bila you have to submit written form? Is it still 7 months after your closing? Okay, that one you check later. I think that this means that those labata, they are not those company entity in Labuan, they are not under self-assessment system. Because under self-assessment system, you submit your written form, whatever, then you compute your tax liability yourself. All right. So in the form, for example, if you're doing e-filing, so you should know your tax liability. So whenever the deadline is, so you have to pay within 30 days, or you have to pay by the deadline. But in this case, you submit and then you have to wait for RIB to issue notice. So this one is like the old system lah. So mean that they're a bit lagging in terms of self-assessment. They are still waiting for RIB to issue notice of assessment. So upon receiving the notice of assessment, then only they pay within 30 days from the date of the notice. So good for the company means that they have extra time lah to pay for additional time to pay for their tax lah, rather than under self-assessment system where you have to pay by the deadline. All right, and similarly, fail to pay within the time, 10% is charged. So that one is the same. Yeah. So I boleh buat soalan macam ni tau. I can mix just to compare between Income Tax Act and Labata 1990. Then you have to list down all the similarity and all the differences between the two income tax. Okay.
Okay. For the next slide. And then IRB requires Labuan entities to keep records, books, documents, and returns for 7 years, which is the same for other companies. But there is a special case where Labuan trading activity are subject to IRB audit and investigation, which means IRB will perform individually audit for trading activity. And then For the additional assessment for tax undercharge, IRB is allowed after 5 years. Not after 5 years, I mean within 5 years. And then for transfer pricing is within 7 years. And then for illegal or fraud transaction is unlimited. And then for the next slide. And then regarding to SST 2.0 for Labuan entity, sales tax is not charged for manufacturing goods within or between designated areas. For example, Labuan manufacturer, bread manufacturer, they sell it within Labuan, so it will not be taxed except for petroleum. And then for service tax, it is not charged for taxable service, which is the same as sales tax within or between the designated areas. But however, if the bread manufacturer for Labuan import it to Malaysia or other part of Malaysia, it is chargeable to 10%. And then for the service tax, there's a special situation where if the Labuan entity perform taxable service within Malaysia, but their main business is in Labuan, the 6% will be charged also. Or the main business activities in Malaysia, but they perform the taxable service in Labuan, 6% will be charged. And then for the next slide. For the stamp duty exemption for Labuan entity, all instruments in connection with Labuan entity and transfer of shares and also establishment of Labuan entity are all exempted.
Wow.
And then for the next slide. That's all from us. Thank you.
All right. Thank you for the group on the Labuan. All right. Because this Labata ni, the a lot of changes actually in 2019, right? I'm not sure whether anyone of you from Labuan or from Sabah or Sarawak, have you been to Labuan? Anyone?
Yeah, I've been to
You're from?
Labuan.
You have been to Labuan. Can
And
you just share with us? You're from?
I'm from Sabah.
Okay, so can you just share with us how is Labuan? I've never been to Labuan. How can you picture us Labuan?
Labuan. I think it's a simple city. There is some like infrastructure, but I think there's a lot of petroleum offshore company there. And then
But the objective is as a financial hub. Do you think that it's a successful, the government intention for Labuan to be financial, right? All this banking, insurance, Islamic banking.
I'm not sure because I don't see any effects on the financial.
Yeah. I'm not sure, but that's why if you look at the Labata, a lot of exemption is given to companies, even for professional companies. So if you want to open up a company, for example, accounting firm in Labuan, all right, you are exempted from tax. I think 60 or 70% of your SI, right? 60% good, yeah? So you only have to pay tax on the balance 40%, right? But why the government give a lot of incentive? Because they want to attract, right? So why government? So it goes back to the government objective. So they give a lot of exemption, they give a lot of incentive, all right? Even for those CEO, for example, director of a company, if they are non-citizen, all right, their income is exempted. They don't have to pay tax on their income, all right? So, but again, you have to go back because I think that this one is 1990, so now is 2020. 1990 kan Labata? Was it 1990?
Yes, Doctor.
So dah berapa tahun dah tu? 30 years? Kan? 1990 to 2020, it's already 30 years. So maybe you have to go back to see whether whatever the intention of the government, right, in putting Labuan as the financial hub for not only Malaysia but also for the Asian Southeast Asia at least, right? Whether it's successful or not, right? If it's not successful, what's the reason for it, all right? Is it very difficult to locate, all right, businesses in Labuan? So all these, the government has to go back and see what went wrong. All right, I think that it's not that successful. I'm sorry to say, I've not been to Labuan, but I think that companies are a bit reserved to open up in Labuan, maybe because it's not so much commercialized. All right, for you, for example, if you have so many banks in Labuan, but then if they don't have the demand, all right, there are not many companies commercial to use their services. So what's the point of having their business in Labuan? All right. But again, my observation may be biased because I've never been to Labuan, but that's how I see it. All right. I don't see companies are eager to have their business set up in Labuan. Maybe because of the location, like very far from the city, for example. I think that they say that, okay, in one day, you can just finish Labuan lah. You can go tour throughout Labuan within one day, done. Okay. Um, okay, anything else that you want to add on? All right, so we have two presentations today. We had the permanent establishment and we had the Labuan. I think both group had done their job well. Okay, and please share the slide so that we can share in the Google Classroom. And you have not given me the date for your midterm. And remember that we only are going to cover 3 topics: estate, trust, and investment holding company. Yeah, 3 topics only for your midterm, and then I also have to prepare your final exam. And remember that your final exam actually based on all this presentation, and I do have few more topics to cover with you, right? The one which is not included in the presentation. All right. So when is your midterm? The following week, is it?
Yes, Doctor.
So kita ada kelas lagi lah on Wednesday.
Yes.
Yes, and but then Sunday tak ada class. No class on Sunday. Okay, so later you give me the date for your midterm exam. Maybe we can take a 2 hours class on Wednesday rather than Sunday. Yeah, so your midterm will only be for 2 hours during the class. Maybe after your midterm.
Okay.
Yes, Wong.
I'm okay with the time, and where can I know what is the syllabus? Yeah.
The topic for your midterm?
Yes.
Estate, trust, and investment holding. Itu je kan you belajar? Ada belajar lain? Before that? Tak ada kan? 3 topik je. 2 hours. 3 topics only. Can score A1. Alright? Okay, that's all for today. Thank you again for your time. Thank you again for your participation. I hope that everyone has benefit from the presentation, and I hope to see you again next class. With that, thank you and Assalamualaikum warahmatullahi wabarakatuh.
Thank you, Doctor.
Alright.
Doctor.
Bye.